as many of you know, I think there is much wrong with derivative accounting and derivative trading operations in the United States, and I don't think the full penalties have yet been paid. The accounting for being actively engaged in derivatives, interest rate swaps, etc., is very weak. I think the Morgan Bank was the last holdout, and they finally flipped to a lenient standard of accounting that's favored by people who are sharing in the profits from trading derivatives, and naturally they like liberal accounting. So you got an irresponsible clearing system, irresponsible accounting. This is not a good combination. Yeah, the derivatives business has the very significant problem that the accounting profession sold out. The accounting is improper. It front ends way too much income. It's irrationally optimistic because that's the way the denizens of the field want it, because it creates bigger compensation. This is intrinsically an irresponsible system, and it's another case where the accounting profession has failed the wider civilization. To say that derivative accounting in America is a sewer is an insult to sewage. Yeah. The main problem is the whole system of accounting is wrong. The whole system of accounting is too optimistic. It would be like going into the taxi cab business with a 30-year depreciation rate. And in my view, at least, the quality of accounting in America for derivative transactions is still terrible. And it's terrible in that it's too optimistic. And one of the places where it's most terrible is when you talk about guaranteeing future credits way out, years ahead. That sort of thing just lends itself to people getting very optimistic in their assumptions and in their audited figures. And people pay attention to the audited figures, not the underlying reality. So therefore, if the accounting is lousy, the business decisions are lousy. And I think that's going on mightily as we sit here. In engineering, people put big margins of safety into systems, atomic power plants being the extreme example. And in the financial world, in derivatives, it's as though nobody gave a damn about safety. And they just let it balloon and balloon and balloon in usage and number of trades and size of trades. And that ballooning is aided by this false accounting where people are pretending to make money they're not really making. I regard that as very dangerous. And I'm more negative than Warren in the sense that I'll be amazed if I live another 5 or 10 years if we don't have some significant blow up. They've introduced this enormous instability into the system through all these clauses about collateral posting, and nobody seems to recognize what a disaster of a system they've created in an attempt to make each party feel safer. It's a demented system. Part of the trouble in you were talking about came because people didn't think enough about the consequences of the consequences. That's a common error. You start trying to hedge against interest rate changes, which is a very complicated thing to do when you've got a mortgage portfolio where people have options to pay the mortgages off early. And then, under the accounting conventions, the hedges started making the quarterly results lumpy instead of nice and regular the way all the institutional analysts like them. So then they use another bunch of derivatives to smooth out the returns. Well, now you've morphed into lying. Well, it's complicated enough to start with, but when you add lying to the process, it's a Mad Hatter's Tea Party, and yet this happens with eminent directors of vast financial sophistication sitting on the board.
it shows that the sophistication won't save you. Somebody has to have the common sense to say we're just not going there. It's too tough.
Well, my thoughts are that stupid and dishonorable accountants allowed the genie of totally improper accounting to come out of the bottle and descend in the derivative books of the world. Once that has happened and people have used it to create masses of assets and masses of earnings reports and bonuses and status and so on and so on and so on, getting the genie back in the bottle is no small task, because you have these huge vested interests who are fighting you. And what ordinary housewife, as she puts the toast in the morning, is thinking, my God, I've got to do something about derivatives. So the people that have vested interests in the current system are powerful, and the rest of the people don't care, and so this evil genie stays out of the bottle and does more and more mischief with each passing day. If you're trying to fix this, you are going to have a very interesting life.
Well, of course it's crazy. It's neither fair nor sensible. But if a small group with a lot of money and influence cares a great deal about something and the rest of us are indifferent, why, they tend to win before our legislative bodies. That's just the way it is. I always liked Bismarck's remark that you shouldn't watch two things, sausage making and legislation making.
Where you've got complexity, which by its very nature provides better opportunities to be mistaken and not have it come to notice, or to be fraudulent and have it not be found out, you're going to get more fraud and mistakes than you are if you're selling a business where you shovel sand out of the river and sell it by the truckload.
Yeah, and of course the accounting being deficient enormously contributes to the risks. If you get paid enormous bonuses based on reporting profits that don't exist, you're going to keep doing whatever causes those phony profits to keep appearing on the books. And what makes that so difficult is that most of the accounting profession doesn't even recognize how stupidly it is behaving. And one of the people in charge of accounting standards said to me, well, this is better, this derivative accounting, because it's mark to market. And don't we want current information? And I said, yes, but if you mark to model and you create the models and your accountants trust your models, and you can just report whatever profit you want as long as you keep expanding the positions bigger and bigger and bigger, the way human nature is, that will cause terrible results and terrible behavior. And this person said to me, well, you just don't understand accounting. Take derivative trading. There's a lot of slop in derivative trading. And the clearance problem would be awful if a lot of people wanted to do something at once. In the drug business, they say prove that this works before they certify the drug. On Wall Street, they start believing in the tooth fairy, and if one guy's reporting a lot of money, why, everybody else is asking, why aren't we? It's a crazy culture, and to some extent it's an evil culture, and it needs a huge reining in. It was demented to allow derivative trading to end up the way it has ended up, and with the clearance risks that are embedded in the present system. And it's amazing how few people spoke against it as it was happening. There was just so much easy money to be reported. A lot of the money that was reported as being earned wasn't really being earned. It was in that wonderful category of assets that I call good until reached for. They sit there on the balance sheet, and when you reach for it, it just fades away like. And the accounting profession utterly failed us. The worst behaving were the people who set the accounting practice standards. And they're very bureaucratic and take forever, and they don't want to do anything real difficult that displeases people. This is not a combination of wonderful qualities when your job is to set accounting standards, which ought to be dealt with sort of like engineering standards. And they don't even have the right approach. So there's a lot wrong.
This is basically a dirty business. We don't need more of this kind of thing in America. We need less.
Imagine taking banking into derivative trading. Who in his right mind would have allowed that?
You know, well, there's more money in it.
Well, that's why they're in it.
Yeah.
But it isn't necessarily a great social outcome for the rest of us.